Good afternoon, YouTube. My name is Miles and I'm from Pure Investments, and today I'm going to start a series on indicators. This series is going to be an in-depth explanation on each indicator that I use for technical analysis as part of Pure Investments, and I'm hoping to explain how I use these indicators so that traders can understand what I'm talking about when I post my technical analysis. It's better to understand technical analysis in the market when you're following technical analysis. Just because you don't want to blindly invest in the coin, you want to understand why people are choosing this coin, why it's a good buy and such, which inspired me to make this series. So, let's start out with one of the most commonly used indicators called RSI, which is short for Relative Strength Index. What is relative strength index? It's the momentum of buys against sells, which oscillates and indicates the direction that price momentum is moving. Meaning that this line right here on TradingView, if it is moving horizontally, the price remains pretty neutral. If the line is moving upwards, that means there's a lot of buying momentum. And if it's moving downwards, there's a lot of selling momentum. This can be a very powerful tool. There's an equation to calculate the value of RSI, but that's not too important because most exchanges such as Bittrex and trading platforms such as TradingView, they already calculate the RSI for you. You just got to pay attention to that number. So, let's take a look at what relative strength index is. We have values from 0 to 100. Which are calculated from the relative strength index. And these values tell you whether or not a coin is oversold or undersold, or neutral, let's say. The neutral zone is between 30 and 70, which is indicated by this purple rectangle in the RSI indicator. This means that the price is pretty neutral and can just move stably, whereas the 70 to 100 range, indicated by this white area above the purple box, tends to indicate that a coin is currently overbought. A coin being overbought means that there's a lot of buy momentum on the coin, and the buy momentum is so high compared to the sell momentum the past couple days that it's very in danger of falling. So when I see a coin that's in the 70 to 100 range, I tend to consider selling some of my position just because it has a very good chance of crashing. When RSI is this close to 100, it's very likely to move volatilely downwards. And we could say the opposite for the 0 to 30 range. This range below the purple graph indicates that a coin is very oversold. As a strategy, I tend to buy coins on the one-day chart that are oversold. So if I saw this RSI line going below 30 on Ripple, I would have purchased a lot of it just because coins that tend to be oversold turn around very quickly and make upwards movement. Now you got to keep in mind that RSI doesn't guarantee that a coin is going to moon if it's oversold or crash if it is overbought, but it gives you a good idea of what could happen. So I kind of use this as a fundamental behind my technical analysis based off of many other indicators, and use this to like motivate myself to further support or not support a coin. And also another thing about RSI to keep yourself aware of is that RSI is different on the one-day chart compared to other charts such as the 4-hour and 1-hour. We can see that here. So currently on the one day, Ripple is overbought. We can clearly see that because when it was oversold, it started to pump a lot. And once it started pumping, we see this buy momentum rise like crazy into the overbought area, and once it's in the overbought area, it dips down a bit but goes back into that overbought area. And we can see it's currently has a rating of 76.7. So let's switch to the hour chart and see what that looks like. So actually, as we can see on the 1-hour chart, RSI is actually in the middle. This means that buying momentum on the hourly chart is pretty stable right now. Whereas we can see yesterday, RSI on the 1 hour chart was constantly being in the oversold range. And right now, it looks like the RSI is moving upwards on the 1 hour. So, you may be wondering which chart should I be looking at RSI for, and honestly, it all depends on the time length that you're going to hold a coin. I tend to look at RSI on the 1 hour and 4 hour chart if it's a coin that I'm going to be day trading and swing trading, because it refers to the momentum that's going on in a short time frame. And if I'm looking to make some quick profits, that is what I'm looking at, a short time frame. But if you were, say, to be holding a coin for medium or long term, it's a good idea to look at the 1 day RSI. Because as we can see, RSI almost completely correlates with movements. We can see on each of these pumps, RSI has moved very greatly towards the overbought region and then quickly plummeting down back to the oversold region and oscillating between these two. This is a good trading tool I go off of because if you generally look at the 1 day, oversold coins almost always go straight back up. And remember, like I said earlier in the video, this is not always true, so don't put all your bets on there. Use RSI with other indicators. Don't just rely on only RSI or you might get burned and lose money. So this is a pretty neat tool. I like to use to guess which direction a coin is going to be moving in for either short term or long term. But there's also one more thing you can do with RSI that is very useful, and that's a feature called divergence. There's both bullish and bearish divergence to indicate which direction it's going in, and I'm going to provide you an example with Sia coin, which has seen some crazy movement recently. So, let's look at Sia coin on the 1 hour chart. So, what is divergence? Divergence is when the RSI is moving in the opposite direction of the relative lows of a coin, price-wise. So, C coin is a prime example because recently we had some bullish divergence. This is bullish divergence, and let me explain how to tell whether or not divergence is bullish or bearish. So, if the recent lows of a coin are moving upwards and RSI momentum is moving downwards, that's an indicator for bullish movement. I kind of remind myself that it's bullish because this is opening up to a bigger zone, so I think bullish is in big gains. But if we have the opposite, where RSI momentum is moving upwards and the recent lows are moving downwards, that usually indicates bearish, and I think, you know, small at the end, bearish movement. And why does this work? This means that the relative prices and momentum are moving in opposite directions, which indicate volatile movement. We can see it in this Sia coin example. So remember, this is bullish movement we're talking about. The relative low in this area, which is right before the pump, we indicated at this point, and the relative low that was the lowest low after the crash on Sia coin is right here. So I made it easier for me to visualize and drew a line connecting those two lows. As we can see, the relative low is increasing over time. Now let's look at RSI. At that same point where we had this first low on the price chart, we can see that RSI was at this point. So I'm starting a line right here, and we can see that at the second price point, RSI touched here. So we can see that momentum on RSI went downwards as price relativity went upwards, and that caused for an explosion. And as we can see, Sia coin moved in this direction and went for a 2 times profit. This is An indication that I actually used to predict that Sia coin was gonna move up 50%. But actually, I guess we lucked out because it moved up 2 times instead of 50%, which is even better. Personally, should have bought more, but past is in the past. So, if we let me show you what a bearish divergence would look like. If we had, ooh, sorry, if we had the RSI momentum going this way instead, and the relative lows were flipped around, so we had the low up here, then this would be a bearish divergence, meaning the price would probably plummet this way. Um, these are, I think divergence is a lot more powerful than just looking at RSI. It's a bit hard to understand if you're new to this, but there are plenty of resources that explain divergence on our community Discord. So once this video is over, feel free to use any of our free resources on the communities, and also premium chat so that you guys can further learn technical analysis. So that concludes my first video that explained RSI, a tool that is very useful for aiding your predictions and making safer trades. I hope you enjoyed this. I'll be making a new video later on this week, and hope everyone has a happy holidays. Good luck trading, and I will see you in the next series.